shareholders have not been playing ball with what the management wants. All of this becoming very stark in the case of remunerations. So recently, for example, Eicher Motors' plan to increase the remuneration of their MD, Siddharth Lal, was turned down by shareholders because they thought that a 10% hike was not in order when the median in the company was about 1 to 2%. So they pushed back that resolution. The board now has come back with a resolution deciding to hire him for another 5 years and also increase that remuneration by 10% as was planned. What they have done though is that they have said that there will be the cap on what percentage of profits can go as remuneration to the MD will go down from 3% of profits to about 1.5% of profits. The explanation that the board of directors has given is that the median is actually closer to 9.7%. It seems like a smaller figure because a lot of people at higher salaries have exited, and a lot of people who were hired in the last 1 year came at lower salaries than before, which is why the median seems to have fallen. But the average hike that the company got and employees got was 9.7%, so 10% is really quite in line. But that's not the only case. We've been seeing this with several companies, a lot of them auto companies, in the last 1 year or so, from Bajaj Auto to Hero to others as well, where compensation specifically has been questioned. For example, the shareholders of Bajaj Auto questioned compensations being given or being proposed for Mr. Rahul Bajaj, who's now Chairman Emeritus, but because the promoter has such a large stake, they managed to push it through. It raises some important questions on what the role of shareholders are and why shareholder activism becomes very, very important. To speak on this, I'm joined today by Shriram Subramanium, founder and MD of InGovern, Amit Tandon, founder and MD of IIAS, with us on the show today, as is Prabal Basu Roy, advisor to chairman and corporate boards. Welcome to all of you, and thank you so much for speaking with us. Amit, let me begin by getting your take on what we've seen. Eicher Motors, of course, has come back and said that they are going. The board has backed their proposal once again. They've explained their stance about why it's fine to give Mr. Siddharth a 10% hike, and now they will get the shareholders to approve via postal ballots. Why do you think such a process and transparency becomes very, very important?
Good evening. Thank you for inviting me for the show. I'd actually want to take a step back, and what I want to point to is the fact that we are seeing a number of resolutions getting defeated. Even when resolutions are not getting defeated, you're seeing a large number of institutional shareholders and other shareholders providing pushback to management on the vote. Now, I want to point to the fact that when they knew a lot of this change has happened on account of the Companies Act 2013. The Companies Act did a couple of things. First is it introduced this whole concept of e-voting. It was there rolled out on a pilot basis before that, of course, but it kind of embedded it, did a hard embedding in the resolution, in the regulations. And one consequence of that was that, look, before that, voting was through a show of hands. So whether I held 10 shares or 10,000 shares or 10 lakh shares, once I walked into the room, I raised my hand. Each of the three were counted as being equal. As a consequence, you were really not able to count what had happened. Once e-voting came into play, each vote got counted. So if you had 10 shares, your 10 shares were counted. If I had 10,000 shares, my 10,000 shares were counted. And if Shriram had 10 lakh shares, his 10 lakh shares were counted as 10 lakhs. So that kind of made a big change to what we are starting to see today, which is investor pushback. The second is they introduced this whole concept of a majority of minority, which meant that, look, if as a controlling shareholder, you have an interest in a particular resolution, particularly with regard to related party transactions, you did not get to vote. It was all other shareholders who got to vote. And if you got a majority of other shareholders approving it, the resolution would go through. And the third development, which people don't talk about so much, is this whole focus on stewardship. Now, stewardship is I'd like to believe it's governance for institutional investors. Then what it says is that, look, you're not managing your own money, you're managing money on behalf of your unit holders and on behalf of your policy holders, and therefore you have a responsibility towards them to kind of monitor the company, make the right investment, engagement by investors on a number of issues which have otherwise bothered them or which they may have tiptoed around in the normal course, but given their stewardship responsibilities, they're kind of pushing back on management and at least telling management how they feel about some of this. Back to you.
You know, Shriram Subramaniam, like Amit said, that there is now pushback. But how far does that pushback go? Like I mentioned in the opening comments as well, in some of these companies where the promoter shareholding is fairly large, after a point, they have the ability to steamroll their way. So does it then just become tokenism?
Yes and no. Look, over the past 11 years, since 2010, when Amit's IIAS and we, as InGovern, took birth, proxy advisory firms also have evolved, and shareholder activism has also evolved. In fact, as Amit said, only in 2014 did actually the New Companies Act give more powers to minority shareholders. Right, and initially institutional investors were voting against capital restructuring kind of transaction where there's a M&A, where there's a valuation, etc. Right now, increasingly they are now sensitive to other issues: compensation, ESOP repricing, and ESOP grants, etc. are taking root now. Right, and so this increasing activism is going to evolve over a period of time. Of course, even director appointments, auditor appointments, etc., should come into scrutiny at a later date. Right now, it is related to transactions, compensation, etc. Especially this year, given that there was a COVID situation, a lot of other stakeholders got impacted, sort of, I would say, a large impact on employees, on other suppliers, on even consumers for that matter, etc. So at that time, giving an egregious pay compensation increase sort of goes back to that Occupy Wall Street movement of 2008, when CEOs across, there was protests in the US against companies where CEOs and senior management were taking large sums of money. So from that perspective, one has to see the evolution of shareholder activism in India. But management, of course, will try to push their way. There has to be increasing engagement between shareholders and management, minority shareholders, and the regulator also has been pushing institutional investors to vote for and take a stand on many of these issues.
You know, Prabal, let's come to what this round of shareholder activism has been about. And it's basically about remuneration coming at a time when we're still dealing with COVID-19 pandemic and its impact on businesses. A lot of businesses have been hit. We know salary hikes, at least in the last year, were at an average of some 4%, expected to be 7% this year, which would be better, but on much lower basis. Do you think there is a case here to benchmark the top guy to what the median of employees get paid?
See, Tamara, that's a relatively smaller question, actually, and I'm speaking on behalf or from the perspective of corporates. The Amit and Shriram obviously are doing stellar work in the area of proxy advisories. See, the larger issue, which is, and I'll answer your question, of course, but the larger issue is that shareholder activism started from about 2014, with the Maruti and Suzuki case. But it's still in its infancy. But what is really happening is that the landscape is undergoing a fundamental change, the landscape. And many potential areas, where this activism will take roots, as essentially the shareholders start asserting their rights from being just inert, only interested in financial outcome like investments, dividends, etc., to demanding greater accountability on running the company and demand for more information and justification from management. This is what we are seeing now, actually. And in that context, of course, managerial remuneration is only one small part, very small part of it. It's to do with the larger issues of governance, in which obviously managerial remuneration is one part, but appointment of directors, capital allocation, related party transactions, changes in board composition, and the works. The second is, of course, in change in corporate control itself. So valuations, business amalgamations, there have been cases for each of them, from small cases like Bharat Nidhi, etc., to big ones like, CG Power and the rest of them. So the third is in sale of assets, which happened in the Hotel Leela case, for example, the sale of assets. And the fourth is in making overseas investments, like the Sun Pharma case. So the point is, it is across a wide cross-section of things which have already happened from 2014 onwards. And that is now gathering momentum. So I think that is something which is actually quite encouraging in many ways. And we can talk about that later. But just coming to your specific question on managerial remuneration.
Yeah, but let me come back. Yeah, let me come back to the point.
Yeah. So the point is managerial. No, that's a very small issue. It's a very, very small issue. I mean, this is just one aspect of it. So you have Sun TV, for example, where Mr. Moran has a salary, which is massive, right? But it went through. For an example, in Siddharth Lal's case, it was a question of, a couple of crores, and where? Well, yes, the points are valid. But whether it should be benchmarked or not, who's there to benchmark that? I mean, I really don't know what the benchmarks are. So for that example, in some companies I know, promoters don't even take a salary, a penny in salary. So there's a whole spectrum here. So I'm not sure about the benchmark part of it, but yes, that depends on individual companies and shareholders.
Okay. No, so Mr. Tandon, do you think it's a small issue? Because right now, I think we have to focus on managerial compensation since it has been the starting point and the focal point of a lot of shareholder pushback. There may be other things that shareholders will push back and have been pushing back on. But today we're talking about managerial compensation because it comes in a very recent context of COVID-19, what it has done to revenues, to companies and to salaries.
I'd agree with what Prabal said. It's one of the very many issues which kind of come to play and which engage shareholders. Of course, one of the things which I find when I talk to investors is that despite the fact that benchmarks are very difficult to come by, compensation is increasingly engaging them. Maybe because it's a fairly complicated transaction. How much is too much? What do you benchmark it? Is it benchmarked off the peers in the industry, or is it based on the performance? If it's based on the performance, what are the benchmarks which you're kind of getting the CEO to chase? Is it market share? Is it return on capital employed? Are you saying that, look, we want you to set up a greenfield project and let's see whether that's getting implemented in time? So it kind of does take, while it is one of the many issues which investors need to deal with, I would expect it to be something which takes a great deal more of mind share than some of the other issues. If there's a transaction happening, it's episodic. You're going to talk about it and you move on. Capital allocation decisions are again something which stay, but it's not something which something which is coming to shareholders to vote on a regular basis. So from that aspect, it is something which is increasingly becoming critical to investors. At another level, of course, what we keep saying is that, look, if the promoters don't kind of put checks on themselves, you'll find that the government will do so as they were doing about 15, 20 years back. And we certainly don't want to go into that situation. you want people to be rewarded for the risks they take and for the outcomes they're able to achieve. But it needs to be within bounds. And as you said, maybe one of the among the various parameters are, the CEO salary to the median salary. If you look at what's happening in the US, when it kind of touches, crosses 180, 190, 200, there's a song and dance about it. In India, it's routine for a number of companies to have this ratio at 220, 280, crossing 300. So maybe that's one strong benchmark that, look, it recognizes that as a CEO, you're pulling everyone with you, but you need the other parts to function to be able to deliver. Back to you.
I want Shriram to come in on this. And whether you also think that it's of course it is one of the many other issues, but I want to talk about it because it's what's front and center right now. Do you think there is a need to benchmark the CEOs or the MD's salary, or give into play the fact that that is the leader who will then ultimately be responsible for how the company performs?
See, at the end of the day, even the CEO lives in an ecosystem, right? Ecosystem of other stakeholders, the other employees, etc. And eventually, we are in a society. At the end of the day, in fact, there is a thinking that equitable societies, etc. Those are evolved thinkings, of course, right? But at least as of now, because shareholders have also contributed to the risk by investing in the company. At least the CEO's compensation, one of the things is this pay, which is a benchmark in some ways, but also a large part of the compensation should be in the form of dividends paid, because then the company is equally rewarding all shareholders who have taken the risk of investing in shares, especially for promoter salaries we are talking about, right? I mean, so there is a distinction to be made between professional CEOs and promoter directors, executive directors. Again, this is a distinction that we notice in Indian companies, a large number of promoter-driven companies, where the ratios are more than 200, as Amit said, and some of these compensations tend to be egregious. So from that perspective, it's evolving. There is no one final answer, and everyone is scrutinizing. That itself is a starting point.
Yeah. No, what happens with the scrutiny? Is it just going to remain tokenism? Prabal, do you think that managements, corporates are sitting up and taking notice and feeling the heat? Or especially in companies where promoters have a significant enough shareholding, it is something that, they just tolerate for a bit and then eventually do get their way. I also want to add to this, you talked about a lot of other issues that are going to come up over the next few years. What are the other things that can become flashpoint between shareholders and management?
Sure. So this is a two-part question. The first one is easy to answer, and I will sort of try and answer that about the managerial remuneration part. See, as of today, the reason I said it is in infancy, the whole movement is in infancy, is because the outcomes and the execution of these resolutions, of these activism efforts, are essentially three. One, it goes into litigation, like the Cyrus Mistry case, which rarely works. Second, it blocks resolutions, which is partly successful, like we saw in Eicher Motors, Crompton Greaves, Siemens, Sun Pharma, etc. So you can block some resolutions. And third is working with promoters, working with the promoters. That is what works the best. And we saw that in many other deals like Maruti, etc. All of that. So therefore, in my view, these are good sort of initiatives which are happening for the overall landscape. But in the current regulatory system, where the options are very limited in terms of a market for corporate control doesn't exist in India practically. So therefore, working with promoters is the best way forward. And I think to that extent, if we can make headway, that will be very good. The second part of your question was, what are the future flashpoints? And yes, and that is probably the larger question. I think activism you see, we must realize is very closely related to the maturity of the markets and the new breed of institutional investors who are now participating in the Indian equity markets. So therefore, one thing which I see quite often while dealing with foreign institutional investors is that the ESG framework is getting more and more important for investments and ultimately valuations. So maximizing shareholder value, which was the driving mantra of corporates earlier, is now giving way to the idea of sustainability of an organization, right? And the G part, which is the governance part in ESG, that has already started with many sophisticated investors requiring much more disclosures on the balance sheet. And this is a potential area of activism too. So therefore, I think in India, we should be particularly concerned with how such kinds of activism are enabled, but these are positive activisms. They'll ultimately go to benefiting the company and all the shareholders.
Let me just add to what Prabal said. And, what we believe is Indian promoters on the aggregate own about 50% of the broader market. And this is both a strength and a weakness. It's a strength because, unlike the Western market, which is driven by the focus on quarterly numbers and quarter to quarter and has become extremely short-term in nature, the fact is that here, with families owning 50%, they can afford to take a generational view of business and say that, look, we are going to kind of preserve and grow the business for the future generations so that they can be stewards of that business. Having said so, this is also a big weakness, and it's a big weakness because they own 50% of the business, and they own 100% of the stock. Now, assuming on the other side, you've got institutional investors who own about roughly 35% of the market, and others who own 15%. Even if they were to vote, they vote between, institutional investors vote about 70% of their retail investors and others about 15%. But assuming that they were to vote a little bit more, you would find that the promoters who vote 100% of their shares will get most of the resolutions carried. So I don't think we are looking at activism at this stage where, I can say you should do A or B. What we are looking at is a greater engagement and a greater signaling, which is going on from investors to promoters, and that, look, this is what we think is the right thing for you to do, or this is the direction we'd like you to move. And again, as Prabal pointed out, a great area of engagement will become ESG, which is not necessarily something where you're saying that, look, I don't like you, but working together to say that, look, what is it that you can do to make the company more sustainable? What are the policies which the company should adapt? What are the disclosures which they should make in that direction? So again, it's not necessarily being, we believe that investors and companies need to coexist. One can't exist without the other.
Absolutely.
No, obviously, it's not a either or a versus kind of situation, but it is interesting because it will perhaps force companies to focus on what is going to be very, very important going forward. When you talk about ESG, is there, for example, gender parity at the top or in the employee force of the company? Are the practices becoming sustainable and environmentally friendly? All of these are important things that companies now need to keep their eye on, and even if it's something that's not enforceable in most cases, at least being shown that mirror and asked that question might be a good enough start for now. Thank you so much to all of you for joining us on this very interesting discussion. We're